I'm excited about this. Bill Gurley is a general partner at Benchmark. I've had the great honor of being turned down for funding by Bill, which speaks to his wisdom, but he did it in a very nice and insightful way. One of the reasons we asked Bill to come on is Bill's written a couple different things in this space and talked about it. He wrote in 2009 something called Less Than Free, and it was about Google Maps and their strategy of giving that away for free. More recently, he wrote something about the importance of the local component and how local was really going to drive some of these technologies. He thinks deeply about these things, and they've also invested in Zillow, OpenTable, Uber, Nextdoor, and Yelp, so, among others. So they've had, Benchmark and Bill particularly have had a lot of experience in this. So Bill, and then Cory Johnson is the anchor for Bloomberg West, which is a daily tech blog, or I'm sorry, tech show on Bloomberg. He's covered a wide range of technology fields, and they're going to have a discussion and hopefully some time for questions. So let me introduce Cory and Bill.
Why don't you go down there? I'm glad to talk to you about this stuff of local and mobile, because it's you have this really interesting blog post, and you show this chart, and it's the classic Silicon Valley chart. It's a red line that kind of ambles around and goes straight up and to the right. But it wasn't a Silicon Valley story. It was the story of the Yellow Pages.
Right.
I thought that was an intriguing notion.
Yeah, it was like an 80-year ramp, but it did. It went like this, and then it went exponential, and it peaked at about 2006 at somewhere around 14 to 15 billion in the U.S.
And what that's really about, sort of how local work. I mean, that, you know, in this discussion of who needs local advertising and how does local advertising work, the argument, you know, during the first phase of the bubble, you know, back when you and I met, it was all about, well, you got to get a website.
Yeah.
If you've got a pet grooming service, if you're a locksmith, you need a website. That's going to be your. But that was a difficult process, and that sell didn't seem to have a lot of payback.
Yeah, I think the irony of the Yellow Page business peaking at that value is today it's less than half that. So it took 80 years for it to reach that pinnacle, and in less than 6, it's more than fallen in half. And I think it's a very common thing if you're in a multi-tenant building to just see this pile in the corner of these books that no one wants. And it's amazing how quickly something like that can go away. And it's not just the Yellow Pages. So local advertising measured by a bunch of different groups peaked at about the same time at over 100 billion. And many of the channels, so local radio, local newspapers, you know, magazine, many of the channels that people would use to advertise a local business are going down like this because the online alternatives are so dramatic.
Well, how much of that was it, you know, that happened to coincide with the financial crisis, and you know, the thing I always looked at was auto sales, and how much auto sales really drove a lot of local advertising, local TV advertising, local radio. That taken a big whack, but that's come back quite a bit. But local advertising is it fundamentally changed by what? What were the things that really?
Well, one, I think that if you go back about 5 or 6 years, you talk to a local business owner, and they were somewhat skeptical of the internet. You know, maybe they had a web page, but they didn't have a lot of incentive from their perspective to lean into this thing they didn't understand. And I think 2 things happened. You know, Yelp's arrival kind of forced their hand, because you had people walking in the door who had heard this or that about their business, and they had to go look it up. They were forced into that discussion. And then this is a little less clear, but I think Facebook played a role in that it pushed internet usage deep into the American home, such that any business owner coming home just saw it being used on a daily basis and was like, I got to do something. And so the combination of their other channels going like this, and then this kind of awareness of the internet and how it's impacting local business going like this, has created this amazing wave to launch a bunch of different companies. He mentioned 5 of the ones we're involved in. We're actually involved in 10 companies that get the majority of their revenue from local businesses.
In your blog post and just in your what you were just saying there, you didn't mention Craigslist, which I feel like if you talk to people in the newspaper industry, they'll talk about the death of classifieds with the expansion of Craigslist.
Yeah.
But Craigslist has been around for a while now.
Yeah, I think Craigslist, you know, played a critical role at a point in time. You know, one of the things that I'm seeing, my partner Matt Kohler wrote this great Quora post, and it's really short. It should have been this major piece because it's so insightful, titled "The Smartphone is a Remote Control for Your Life." And he just talked about how with things like Uber, you know, you press a button and you get what you want. And OpenTable's kind of like that, and a few others. And it's really insightful from my perspective because that's what's enabled with these devices. Craigslist, you know, is what I would call kind of version 1.0 of Loco. You got a directory and a listing, but it doesn't go into that depth of what's possible if you automate a relationship much deeper into the system. And so.
But what do you mean? Because Craigslist is still getting bigger and bigger.
Sure. Well, I mean, let's use one of the 2 or 3 of the companies I mentioned. So, you know, you could book a black car on Craigslist. You could look up a phone number and call one, but it's not the same as pressing a button and have an Uber arrive. You could find a home on Craigslist because there are people listing them there. But if you go on Zillow, you'll see all the comparative sale data. You'll see the map of every home around it. You'll see a list of the schools. Like the metadata is way richer for making a decision of that nature. And I could go on and on into these verticals, how some of these newer companies that are leveraging smartphones, leveraging the data that's available, bringing suppliers and consumers into a guided marketplace just creates a richer experience than you get with a single post listing.
So is the thing that makes Craigslist or hastens the irrelevance of Craigslist mobile, the phone?
I think mobile, I mean, obviously, this is like the least insightful thing I could say. Like, the arrival of smartphones is a big, big deal, right?
What?
Yeah, exactly. You put processing power and especially location awareness, so the combination of the GPS and that really fast processor out into the hands of everyone. You know, if you go back 10 years and you want to do something that touches all the suppliers or all the workers in a given industry, you have to basically spec build embedded devices, right? And you get like Wind River's operating system.
Right.
And like these things end up being big and clunky and cost you about $3 or $4 grand a pop. Today, you just write an app. Everyone already has the devices, so you've lowered the cost of delivering an embedded system to zero. And I think it's massive. What Uber does, solely because they can put a smartphone on both sides, the consumer and the supplier, would have been drastically more expensive without the smartphone. Like if you had to go deploy those devices in those cars. Which is not only more expensive, but it would take forever. Like you'd have to go install them in each and every car. And I think in almost every one of these verticals, there's an opportunity that happens because of that. We're in another company called Grubhub, which is for ordering takeout and delivery of food. And this summer, they released an Android tablet app called Order Hub that lives in the restaurant. So that when you order from their website or their smartphone app, that now goes into a kind of a little B2B system that sits in the restaurant. And then 4 weeks ago, they released something called Track Your Grub, which is a driver app.
It's brilliant. So you can see where the hell is my Chinese food. You can see where it is
coming to you. And not only that, but the restaurant owner now has a God view of their drivers out there, all on this other tablet. And the infrastructure cost of doing all that is near zero.
When you're looking at investments, is that one of the things you look for? Because that, to me, when I looked at the OpenTable when that company got, as a user, I used it a lot. But when I got to sort of look at the prospectus when the company was public, I realized what the real sort of big revenue opportunity, at least the incremental big change in revenue, was when it went into new restaurants, and restaurants using that as a reservation system.
Yeah.
Is that a necessary component of successful local? Is not just front end, but back end as well?
I would say the majority of our companies that serve some type of local marketplace are spending half of their R&D dollars on the B2B side of the equation, the stuff you wouldn't see on the consumer side. Because I think, one of the things I always think about as a venture capitalist, I use the phrase, are we painting the white space? And what I mean by that is, are we working to lay down technology where it hasn't been before to accomplish things that wow a consumer or a business or make their lives easier or save costs?
Give me an example of something that's happened after.
Well, I think that the Grubhub example no one historically has thought, what if I delivered an information system that would help organize all takeout and delivery? Sounds kind of silly, but now it's possible. And that's all I mean. It's like you're pushing automation where it hasn't been before. And I think one of the reasons why local and mobile and social became so interesting is that is an area where technology hasn't been deployed before. And now it's being deployed. you know, in limited cases it's been deployed, like UPS drivers had it just because it was cost effective to do it.
When I went to the buy side and left journalism for a while, I started to look at buying newspaper companies and thinking there's got to be some value here. These stocks are so completely beat up. I kept looking for, waiting for a bottom, and just not seeing it. These continue to sort of, you know, hear these, but every one of them had a new media initiative. Every one of them was thinking about, which is not doing anything, but talking about, thinking about, helping local merchants find a better way to advertise through their process. Why aren't the big guys who are markets? Why isn't the Yellow Pages the biggest player in local advertising?
Well, I mean, you could just go read the Innovator's Dilemma introductory chapter and get most of the answer to that question. But, I mean, there's systematic things like the newspapers were overly burdened with debt because they thought the business was going to go on forever, so they put in place a capital structure that killed them. The Yellow Page directories were quite burdened by unions on the sales side, which made it very ineffective for them to move. They also had tons of debt. So, you know, you build a model thinking it's never going to change and you set yourself up for failure. But I think the other element, Cory, is what I've already talked about, which is we're seeing just an amazing increase in the richness of what can be done against certain verticals. And it makes it tough, from my perspective, to have a horizontal vertical across all small businesses. You know, everyone, I think, has been waiting for the day Google arrives with this great small business local platform built around maps. And, you know, they've been at it. We had the 7-pack moving around on the local search. They've been at it for a while, and they haven't done anything grand yet. And I think one of the challenges is when you start thinking about these verticals, they're all very different. And how can you be good at all of them? And and for a company of Google's size to be good at something that's kind of narrow feels like a waste of time for them. You know, they doesn't move the needle. Right, exactly. And so it's a challenge. I mean, they had launched a mortgage product for a while, and then they pulled out. You know, the biggest vertical of all online, travel, they messed around trying to do it themselves and then had to acquire ITA for like $700 or $800 million.
Which is really just a giant pile of data.
Yeah, but it turns out aggregating all the metadata and understanding all the interactions in a deep vertical is hard. Which is what a lot of these other companies that I'm talking about have been doing for 7-8 years.
And it's principally just flight data to adjust, but it's flight data, it's not more than that. But is there a point where there will be an aggregator of these little companies that the OpenTable's and the Yelps and the Ubers and the, you know?
I don't know. I mean, I think it's extremely challenged by the fact that if you look at where the roots are growing right now, they're growing further out. I talk about, you know, becoming workflow for an industry and all these different smartphone apps on both sides of the network. And so those roots are going deeper and deeper into the orgs and the industries, and the vertical focused players doing more and more that's more like the ITA example, which makes it tougher for an Apple, you know, to go say, oh, I'm going to go launch this, because they'd have to then go learn, you know, the depths of an industry. Now, the one thing that I would suggest is a notion more than a reality. I think there's this notion of a universal wallet. I think, you know, the Passbook, you know, app that's recently been added to the iPhone. And I think that notion of a universal wallet could be companies that are making a play for what you're talking about.
Well, I mean, yeah, the biggest local business of all is business. It's money. It's somehow having control of that. And you see a couple of companies making, you know, obviously Visa dominant in that business, but you see in MasterCard, American Express as well, deep roots in the local business. But then you see these startups. And you've got Google talking about this a lot, but in very different ways. You've got, you know, Square talking about payments. You've got Groupon making some, talking about payments. What are when you look at that business, which is a much bigger business than probably any of these?
Yeah.
Where's the opportunity?
Well, like I said earlier, my partner Matt Cory came with this phrase: is the smartphone's a remote control for your life. If you combine it with payments, then you get this notion where I'm just pressing buttons and I'm getting what I want, right? And I think that's a very interesting viewpoint. I think if you listen to Jack Dorsey talk about Square and how it was built off of what the experience he had at the Apple Store, where can I email you the receipt and, you know, it's all right there and quick. I think it's compelling. Like, you know, a lot of people are going to play. From a venture standpoint, you know, already reached the level of what I call a sport of kings. You know, I think people are going to spend billions of dollars trying to win.
Well, this is not going to give this one up easily. I mean,
I don't know, that's what I'm saying. I think each player's, I think PayPal's all in, right? I mean, it's like a
PayPal said
they're all in.
PayPal said their Cyber Monday this year was 190% bigger than last year.
I think Square is all in. Like, they've already, you know, they've raised $400 or $500 million, right? And they've committed to processing payments for a large retailer like Starbucks at a discount to what their payment fee was already.
But there's the rub, right? I mean, how, like, if this is a race to the bottom in terms of the consumer wins, but what's left, where's the profit left? I mean, I spent a lot of time with Amazon. I mentioned Cyber Monday. I was we broadcast all day from this Amazon distribution center, and in Phoenix, and the building's 1.2 million square feet.
Yeah.
It's one of 4 in Phoenix. It's one of 40 in the U.S. It's one of 80 in the world. And you look at a company like that's willing to operate presently at negative margins, and yet can still float $500 million in bonds in Cyber Monday. It's an exciting day for them.
Yeah.
There's no room for anyone else because they're not actually making any money.
I would consider it a dangerous place for startups to play for the reason that you're talking about.
To compete with Amazon, yeah.
Well, no, whether it's Amazon, you know, PayPal. I think David Marcus at PayPal is doing some really cool stuff. I expect them to do some very innovative things and partner. I think Square has, you know, one of the things that I've always kept as an investment tenet is you have to invest in things that are not only accurate but non-consensus. And the minute an industry becomes choreographed, I remember Bluetooth chips. Like, the whole world decided we were going to have Bluetooth, and no venture startup made any money because the minute it's choreographed, it actually gives the incumbents a lot of advantages, right? Because you're not sneaking up on anybody. Like, the whole industry knows that something's about to happen. And right now, the awareness level on this is so high that everyone's awake. And if they weren't awake, Square woke them up. So every single party that you've mentioned is like paying attention. You didn't even mention another one, CMX, which is the Walmart and Target and a few other retailers have gotten together, and they've got their own project that they're working on,
which is forcing Visa and others to deal with them in a different way at a different discount because they've got their own railroad.
Absolutely.
So when you are pitched new ideas, are you even going to your entrepreneurs and sort of saying, okay, we've got this vertical, we've got this vertical, we've got this vertical, we've identified, or identify for me the next 5 that are similar and have similar characteristics?
I think you can only do that for a while, you know, because, you know, there's this phrase, you want to shoot in front of the duck, right? If you're, I don't know if there are any hunters in the audience, but if you're using a shotgun, you have to track in front of what you're going to shoot.
That was Elmer Fudd's problem.
Yeah, everything's moving. And so I don't know how long you can ever play a game where you're saying, I'm going to do this for that, because you get caught up in where things are catching up to you and run over. I did publish a blog post which people could go see about things we look for in compelling marketplaces, but there's some obvious things like fragmented markets are better than concentrated markets, because in concentrated markets, the incumbents won't let you play a role.
What do you mean by that?
If there's, you know, airlines has become a horrible online market because there's 3 or 4 major airlines and they refuse to pay fees to the travel aggregators anymore. So, and there's other industries where that's the case. So high fragmentation is actually a really good thing. The ability for the technology to add value. If you're trying to find a podiatrist for your child, you're only looking to do that once. And you hope that you can have them with your children for the next 15 years. That and funeral services would make poor marketplaces just because there's no frequency, right?
Actually, we own all the funeral stocks in the back of the day. These are great companies down, but it's good steady business.
I'm just saying for a marketplace, there's no frequency. So anyway, there are attributes you can look for, I think, and I've written them down so people go look at it, but that would lead to successful investments.
What about the size of markets? One of my most uncomfortable and therefore favorite moments on Bloomberg West is I was interviewing Jeff Jordan, you know, and a friend of mine, and he was at the time CEO of OpenTable, and OpenTable had just gotten to, I'd done some
deep financial analysis of this and realized that they just jumped the shark. They just got to the point where the average revenue per table was coming down, where all the new markets that we're going into, they kind of fully expanded or largely expanded in the best markets in the U.S. And now we're going into Des Moines and going into Minneapolis, and we're going into places where you maybe don't need a reservation to go into a restaurant. You just go to the restaurant and they give you a table. Yeah. And the financial community hadn't caught on to this, but the numbers were starting to lead this out. So I did this lengthy explanation of how shitty the open table business was, how it had completely hit a wall. Now joining me is Jeff Jordan. Jeff, how are you today? And it was this kind of uncomfortable moment. But I wonder how many, Uber, you don't need black cars in Rochester, New York.
Well, I even think your open table analysis is wrong in the following point, which is even in the restaurants that they're in today, they're less than 15% of all reservations. Now you compare that with Southwest Airlines, that's 95% online, right? So even if you've maybe penetrated this way, there's this direction that still is just natural online.
So filling in the markets where you are.
Yeah, just people coming online, because they make $1 for every reservation. So I think there'll be growth for years to come. In Uber's case, I mean, and this is another thing you have to ask yourself is, will the automation expand the market? And so Travis quoted these numbers at a recent Stanford event, so I'm comfortable telling them to you. When Uber started, there were 650 licensed black cars in San Francisco. Today, there's 850 in San Francisco driving on Uber.
Wow.
Okay, and
that's interesting.
There are people spending 10 to 15 grand a year. And I routinely meet people who have gotten rid of a second car and are using Uber in their daily lives. And so because the automation and the ease of use has led to an expansion of use cases versus the historic example. And that can happen, depending on, the different types of products that you bring.
I want to leave some time for some questions.
Okay.
I think we've got some microphones somewhere in the audience. Maybe not, but there is a microphone. There's a person with a microphone. Is there anybody with a question? Somebody who's brave. I've raised the bar significantly. There's a question right there. Yeah, it's interesting when I was in Phoenix, like I said, a few weeks ago, and Uber been there for a couple of weeks, and their drivers just thrilled with the experience and liking it all.
The drivers are making lots and lots of money.
What do you think are the core issues of the lawsuits for Uber in San Francisco? And
I'm going to try to hear you, I'm sorry.
That the lawsuits for Uber in San Francisco, what's the core issues that are being debated there?
She asked what are the core issues on some of the legal fronts with Uber. The predominant driver of 100% of the legal issues is either a taxi commissioner or a taxi fleet. So taxi fleets get involved in just filing civil lawsuits, and the taxi commissioner protecting their interest are trying to do everything they can to prohibit the company's success. So Uber's operating in every city they've ever launched in. And so the press, I think, is a bit off on some of those things. And the constituents that want to push back have their own lobbyists and their own PR agents, and they're out talking to the press. So there's a lot of FUD and noise out there. Unfortunately, we live in a society where there's a lot of, protected interests that flow through government. One of the council members in D.C., his former chief of staff is in jail because he took a bribe from the taxi fleets, like 2 years ago. And he's still on the commission that's deciding these things. Now, luckily, D.C. just passed legislation that puts everything to bed. But that kind of stuff happens, in every single city. And so it's a delicate dance. Some of the editorials in the Valley have argued that the company should just be nice and sit down and talk friendly. And I don't think that approach alone is going to lead to the best outcome. If Michelle Rhee had taken that approach with the Washington Teachers Union, she wouldn't have made any accomplishments whatsoever. So I think you want to spend, there are many pro-technology mayors that are out there. I think Ed Lee is, I think Rahm Emanuel is, Cory Booker obviously is, Michael Bloomberg. And so I think there is change afoot to be pro-innovation and to make these cities operate better and cleaner. But it's a delicate dance.
Over there.
Do you have any insights into startups that are making it happen in the healthcare space with regards to mobile and geolocation technologies?
Sure. I mean, it's a great question. You asked me about healthcare and some of these different marketplaces. I think it's a fascinating area, and I have spent a ton of time, and I haven't personally created an opportunity that has led to an investment. I think that the application that the Dr. Chrono team has built is beautiful, just fascinatingly beautiful, and they're selling that to general practitioners. It's basically a complete practice management system built around the tablet. I think Practice Fusion with their free EMR is very disruptive. They're going to have to build it to scale and then hope they can monetize later, which is always a dangerous game on the B2B side, but it's very disruptive what they're doing. And there are a number of startups. There's another one called Doximity that's trying to pick up where Sermo left off and build a social network of doctors that allows them all to share ideas. So there's a lot of compelling stuff. I haven't, unfortunately, found the right opportunity for me, but I do think it's a fascinating space. There's one challenge you should be aware of, which is, well, there's two challenges. First of all, a lot of the verticals within medicine are very different. So elective surgery has a very heavy promotional and marketing element to it, as does orthopedic. But heart surgery and cancer don't. And so doctors in those markets behave very differently than one another. And then the other thing is the large medical groups have been building out these huge platforms of MRI centers and labs and X-ray, and they're increasingly inviting general practitioners to live under their umbrella. And as that happens, the number of independent general practitioners is dropping as a percentage of all doctors, and that's really bad for innovation. It's bad for a startup because you're not going to successfully sell to a mega, institution.
Bill Gurley, Benchmark Capital, thank you very much. Appreciate it.
Thank you.